Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Thursday edition. Man, what a day. What a wild, weird day. Completely the opposite direction of what I thought and what many of you anticipated. We did a poll yesterday which said once the government opens up, which kind of felt like it was going to happen last night, question was, are we going to see a huge rock to the upside, sideways, choppy action, or a big down day? And the minority of you said we're going to see a big down day. I think 60-something% of us said we're going to see a big up day. I was in that camp as well. And let me see, I had a comment that was starting to show. This was the comment from John that he goes, what the hell happened today? Well, I can only summarize it with a statement from John Maynard Keynes from many years ago, which I still think is one of the best statements in all of trading and investing, which is markets can remain irrational longer than you can remain solvent. So part of the day today for me wasn't really damage control. As you guys know, I have that core weave put position, which got smoked today. Certainly that's a big loss. But the good news is on the S&P 500, there was a nice little rebound into what was demand became supply level and pulled 52 points out of the S&P. So that's okay. I'm all right with that. I kind of counterbalanced the trade, although I'm not so happy about this core weave sell-off we had today. Anyway, I heard it was another reaction to AI worries. Dan, I think that this is going to continue to snowball. We've been talking about this AI worries for, I would say, a few months now. The audience will probably be more clearly let you know how long I've been saying it, but I just feel like this house of cards is being built with OpenAI buying this, and then they're buying this, and then NVIDIA's buying back into OpenAI, and it feels like it's overinflating itself. Not that AI is done and gone, right? I think we all agree that AI is here to stay, but in many situations when you have new technologies and innovations, you get these hype cycles which bump things up significantly, and then all of a sudden they come crashing back down, and then they start back up again and get their real valuation process, just like the dot-com bubble did, right? From 95 to 2000, irrational exuberance. We had that market just continue to just go higher and higher and higher. Then all of a sudden NASDAQ drops 70%, shake out of the whole industry, and then the real players survive that fallout, and who knows how far we'll drop, but I don't think it's going to be a major catastrophe kind of crash. This may actually be just one of those knee-jerk reactions that leads to a bigger day tomorrow, and we'll talk more as we progress today about what that market looked like. So let me start off by, I'm going to go through from bottom to top, just start our top 8 here to begin with, and then we'll work in individual comments and questions, concerns that you guys see. So part of the discussion I want to look at is what I feel like is this big disconnect. Right now, this Bitcoin chart es no bueno. Now I've got it marked here. I'm not sure why. Oh, this is the Bitcoin futures. Let's go to the Bitcoin spot price, which is a better representation. That is the chart we're looking at. Right now, this does not look good. Lots of spinning you see on your platform today. I have it set on super low latency. Yeah, Big Ollie, man, Bitcoin shakes my head. Well, what have we been talking about? I mean, I have not been bullish on Bitcoin, right? I even did a show, say troubles ahead for crypto. I still think you got a lot more downside movement here in Bitcoin and crypto in general, which, makes for some opportunities for you if you want to short things like IBIT, but this doesn't look good. We are right back to those lows we had from late June, and, I just feel like it's going to continue to drift lower. Now, I guess we have to look further to the left to see where might be that next stopping point. And for me, if you look where we are right now, I've got the cursor at the lows of today. There is one small demand zone, but I don't think this is going to stop it at 97,000. I really feel like this kind of consolidation that happened for pretty much the tail end of April and early May will probably be the next floor. That's going to be right around 93,000. After that, we're going all the way down to 85. So we kind of have 3 stair steps on this one right now. And I agree, it does not look good. I am bearish on it right now. Long term, I'm very bullish, but for the short term, I am pretty bearish on it because the trend is your friend till the bend at the end. We're making lower lows, lower highs, and we broke through that key 100,000 level, which I've been talking about for the better part of a week and a half now. So, yeah, not good. Not good, and it feels like, I hate to say it, we're going lower. So if you got some positions there, you might want to add some protection to them because the sentiment right now is pretty bearish, and I've run through a lot of different reasons which could act as a catalyst for more downside movement in Bitcoin's price chart. Specifically, the miners moving their facilities out of mining and moving more into AI and data infrastructure. You have the long-term holders now, according to Glassnode, selling their Bitcoin, which of course is going to push prices down. And then you have people, the retail investor who thinks the 4-year cycle is there, and that manifests as self-fulfilling prophecy. So I don't really see anything here that would warrant a big pop up in Bitcoin other than Trump tweeting out something like, hi, we're going to make it a strategic reserve, or we'll make it legal tender, or something wild like that. And I think he's got bigger fish to fry for now. Love that, Dane says, make Bitcoin affordable again. Well, remember, you don't have to buy a full Bitcoin. You can buy a little bit pieces of it. And I think if you're a long-term investor, yes, you're looking for that point at which to buy into Bitcoin for the long haul. If you're a swing trader or a day trader, you've got to look at this from a short opportunity. And you guys can go out there and you can go to IBIT and you can short IBIT. And IBIT looking brutal today. I mean, IBIT was down 3.47. It's up a little bit in the after-hour session, but there's a long way down for this bad boy. She says, it's funny how as soon as the Trump family got involved, it's been down. Yeah, I understand. Well, they've been involved for quite a while. They didn't just buy at the top here. He's been in, DJT's been in it for quite some time, and they've just been accumulating. But Eric Trump's new company, I think what's it called, American Bitcoin. Let's see. Is American Bitcoin? I think it's called American Bitcoin. Yeah, ABTC. So this is another SPAC that's just done reverse split after reverse split after. This thing is just so ugly. This is one of the uglier charts. Where's Michael when I need him? This chart is so bad. Look at this reverse split here for 1 to 5. They did another one back in 2024, 1 for 20. They did another one back in 2022, 1 for 20. I mean, this thing is just reverse split after reverse split. This is horrible. Yeah. If that's the case, it's, normally these SPACs start at a value of $10, right? $10. This one, because of the split adjusted, would actually be $19,000 split adjusted. That's what it's IPO'd. And if people see these prices all the time, they just don't understand how stock splits work. But if you look at this spike on ABTC, American Bitcoin Corp, this thing theoretically, because of the reverse splits, had an all-time high of $145,300. And I think a lot of people will be like, oh, wow, it's going to get back up there. Not a chance in hell, guys. There's no way this thing's getting back up to 100,000. It's just been reverse split after reverse split. This is garbage. But this is the one that Eric Trump is now jumping on board with. And my guess is you'll probably see something stating that, the Trump family is doing something with American Bitcoin, and they'll do something to prop up that one and make themselves some money along the way. All right. Now, says, are we expecting another red day tomorrow? Let me go up the list here on our top 8. Let me get to the S&P here now. I'm just going to work my way from the bottom to the top. And once I get to the S&P, I'll make that assessment and let you guys weigh in on it and see what you think about it. Here's the Russell 2000. Now, notice where the Russell came back down to. This is not a perfect line, but it's right off these lows from October 10th. And that low from October 10th, as you can see on your screen, was 2,381. And today, our low was 2,381. So we're pretty much exactly that same spot from back in October. That, just for the Russell, would lead me to believe that we would see a bounce tomorrow, okay? Now, that's just the Russell. That's a different ballgame than, S&P or NASDAQ. But because it came screaming back down to those lows, I would expect there to be a little bit of a bounce. Now, we will wait and see. I don't usually trade the Russell. Typically, if I'm doing futures, it'll be the S&P or NASDAQ. So let's move on there. Yeah, that's not good, Steven. Absolutely. I mean, you've got it bad for a couple different reasons. First off, what do we always talk about, or what do I always talk about? I mean, I feel like I'm a broken record sometimes that you guys, honestly, I love you guys for staying around and watching the show, because at a certain point, I'm like, haven't I said this before? I feel like a broken record sometimes. And now this is changing. Oliver, take notes. You've had this low from April to where we peaked out at in October. Just beautiful, right? It's been making higher highs, higher lows. There's no refuting the gorgeousness of this uptrend. And now, everybody that looks at this can see that this is different, right? The picture has fundamentally changed here for the Russell. Now, it's not really making new lower lows, right? For me, it'd have to break and close down below this 2381 level, which it has not done. But once it does, then all of a sudden we have to look at this as the party's over for this big uptrend. Now, does that mean that it's not going to continue up? No. It probably means it won't continue up at the same slope or magnitude. But I do believe that you'll see some profit taking and people, they'll lock in some money here along the way, going into the end of the year, maybe some tax harvesting. But yeah, this picture is not good. And the fact that for the past 2.5 weeks, the Russell really has not been able to make a new high and just kind of closing lower and lower and lower doesn't look good. Now, this is like the third attempt at this 2381 level for the Russell. Remember, the more attempts that it does, the more likely it's going to break through, because every time it hits that level, it's going to be eating away at a little bit of that demand. So once that thing breaks, you could see a big rip to the downside. Although, I'm looking what happened news-wise today, and I don't really think that the government opening up, fine, that's done. That should have been viewed as a bit more positive. I think the market is reacting in a very negative way because of the data. I don't think the data is that big a deal. I made a funny graphic for this one yesterday, and we talked about the data issue, which was no data coming through for Washington and for The Economist to look at. Is it going to be that bad? I mean, we missed 1 month worth of data. I don't think that that's the end of the world. It's not like they can't. The numbers will be so colossally off from 1 month to the next and miss a month. I don't see that. So we're going to get all the data needed by the time the Fed meets on December 10th. So we'll get our CPIs, we'll get our PPIs, the new month of CPIs and PPIs, and we'll also get core PC price index. We'll get some unemployment numbers before December 10th. So it really shouldn't be that big of a deal. But the market, I think, is feeling this way, right? Oh, no data. No, have mercy. It's going to be ugly. All right, so that was the Russell. Let's go up to the NASDAQ, which is down 2.06%. Still looking good, right? It looks a lot better than the Russell 2000 because it's not coming back down to this 24,400 level. However, it is showing some weakness, right? It's not making new highs, at least for the past couple of weeks. And that's where this gets interesting, is we can feel it changing a little bit, right? It doesn't have that same strength that was vaulting it higher every single time. Yes, we had this pullback going into November 7th, right? That Friday with a nice big hammer formation. We ripped out of that one, and all of a sudden, we start to see that retracement back down. My guess here for the NASDAQ is there's more downside potential. It looks like you're going to be looking at 24,422 as your target for those futures, right? Getting back down towards that level. And then once we close, I guess I should move this line right here. I want to put it right at the low here. I think for me anyway, if you got below 24,158, that's the low from the candle on October 10th. I think once you get below that, that's officially, you're now making some new lows. Some of you may argue that this low we achieved last Friday on November 7th would be that low, but I really do think that this low from October is a little bit more significant because it just felt like it had more of a base built around it. So not looking good there. At least the trend is still up, but feels like we're going to be drifting lower on that NASDAQ. And I think a lot of this has to do with the overhyping of tech, the overhyping of AI, the overinvestment and the over-optimism in AI. Certainly due for a correction here. How deep? We can talk about that a little bit later on. All right, S&P, which to me is a dog that wags the tail. Picture looks better than the NASDAQ. Now, we mapped out that supply zone. Yesterday, we tapped right into it. Literally just kissed it, gave it a little, and then started to sell off from there. So I'm hoping that some of you put a band around yesterday's trading session, a little yellow box around that one, and said, all right, if it breaks down below it, I'll short it. If it breaks above it, I'll go long. And we did pretty much nothing but short that thing today. Let me go to the ESZ. Let's go to the ESZ contract for the futures market, and I will show you the trade today. So when I was looking at this one this morning, I had it on a 5-minute time frame, and you guys, there's a line at 68.51. And the reason I put that 68.51 is look at the last 2 days plus the after-hours session. So what I'm showing you here for the podcasters, I know you can't see this, I'm circling, or my cursor's circling Wednesday's low point, which is pretty much that candle right there. That exact low point was 6,852. Then we came back in the after-hour session and we hit that same level, which was 6,851. And so that's what I use as my basis here. And my thought was, if we're going to open up above that and sell off below it, I'll short it. Unfortunately, it did not happen. We opened up below it. But when we retested it, I ended up shorting that one. And it ended up being fantastic because the gains on that one offset all my losses on CoreWeave, thank goodness. Otherwise, it'd been a pretty miserable day. And this little blip right here, because I had a 12-point ATR or 12-point stop loss on it, this one took me out, which is unfortunate because it would have been a much bigger day, but it ended up being 52 points, which is anytime you pull 52 points out of the S&P, pat yourself on the back. That's a damn good day, especially if you have CoreWeave, which is just falling apart right now, and I'm not really happy about this one because, again, I have all the way till the end of the day tomorrow until those puts extras. I may actually close that one out for a loser tomorrow, but I think you'll probably get a little bit of a bounce on this. I think that the market is overreacting to the news of a government reopening. I didn't think it would be this negative. Let's see. Liz says, I'm wondering if today's down day is due to the fact that we could have another shutdown again end of January. It seems like only a very short-term patch. Yeah, That's possible. From what's resonating around the industry, at least what the media is making everyone believe, is that this is really all about data. And I just don't think that that's that big of a deal. We miss a month of data, okay. And now they're saying that may never be released. Well, we'll still get the next month's data, which will happen before the Fed makes their decision. Also, what's of interest here is this right here. Right now, it's a coin toss. Remember, back 1 month, literally 30 days ago, there was a 95% chance of a rate cut. A week ago was a 69% chance. Yesterday was 63% chance, and today, 52. So it's falling fast. I'm in the camp of they're going to do a rate cut. And the main reason is when you look at what the voting members are thinking, at least for now, it would take some pretty big negative economic data to change them, all right? Powell and Williams, they're on the fence already. So you got Powell and Williams on the fence. You got Collins and Schmidt are opposed. So you already have 2 definitely voting against it, and then 2 that are maybes. But you've got 1, 2, 3, 4, 5, 6, 7, which most likely are going to vote in favor of cutting rates, and you have 1 that's guaranteed, right? Merlin, doesn't matter what happens. You could have an unemployment rate of 35%. He would still be like, cut rates, got to cut rates. Inflation's at 30%, cut rates. I got to cut it 50 basis. That guy doesn't matter. He's off his rocker. So it would take something, in my opinion, substantial to get these other ones who have already been vocally supporting rate cuts to change their mind. So you really have 4 that you're concerned with, which is going to be Schmidt, Collins, Williams, and Powell. Really, Collins has already said I'm voting against it, but I don't know. I just don't think the data is going to be that bad to cause them to jump ship from supportive and all of a sudden vote against it. So we'll most likely get it. Right now, the odds are 52% chance of a rate cut on December 10th meeting. Wild one. What else we got here? If the CPI numbers were going to show lower inflation, the numbers would be released. Maybe. The general theory here, Les, is that because we were on shutdown, those employees didn't go to work, so they have no data to collect, nothing to see here, folks, that they haven't done their job. I don't know. You're assuming that they have been doing their job, and they're just like, let's not release that one because it could scare people. I don't know. I think if you're going to government shutdown, I'm going to probably I'm leaving. I'm not going to go to work, so I'm not going to be collecting that data. I don't believe that now Kashkari, I'm not sure if he's a voting member. So I pulled up a list of all the voting members, which are these 12. So he is a member of the Federal Reserve, but he may not be a voting member. Got to be a voting member to make a decision there. I may be wrong on that, Noam. You can definitely fact check me, but these are the ones on this list that should be voting members. But not 100% sure. I'm okay to be wrong now. I'm wrong quite a bit, as you know. And I have got some humbleness by admitting when I'm wrong, and I might be. But remember, there's a lot more than 12 members of the FOMC, but only 12 get to vote on the rates. Okay, what else did I have here? So we got the back in business thing today. No big deal. I have not followed all the little details that have come out of it. Everyone's all pissed off about the healthcare thing. It's like, okay, well, at least we can get people back to work. And I think that's more important. You get people back to work, morale gets increased. You don't have to worry about so much about the lack of spending, because when you're not working and you're not getting paid, money becomes tight. And I'm hoping that all these government employees have the ability to make their payments for their mortgages and their cars and all their stuff without too big of a hit. Shame on the government for bickering and fighting so long on this bad boy. That says employees were called back for the previous CPI. They weren't furloughed after. Okay. Well, maybe they're doing it. Maybe they are going to release that. Look, I'd love to see the CPI. I'd love to see the PPI data come out. The CPI was actually supposed to be released today. That was the general date to release it, but they removed it from the calendar because they didn't think we'd be back in business today. Maybe we'll get it, but judging by what the press conference said, we're probably not going to get that data released. It's just probably not going to happen. All right, moving up our ladder, we stopped at the S&P 500, and the question from I think it was Naum. We can get a bounce day tomorrow. Look, judging by two different things. If we look from a technical perspective, there's not a lot here that would warrant a bounce tomorrow, right? S&P is not like in a great demand zone or anything. You look at the volume on this bad boy, it's not really climactic. I think that what you're getting is just a little bit of a fear knee-jerk reaction that triggered some algos, and all of a sudden things started to just sell off today. In reality, Is this good news or bad news that the government is back in business? I would argue it's good news because now, again, people are back to work. Things start to go back to normal. Does data come out that might be counterproductive to this uptrend? Sure. But at least we have people back to work. And I think that's a very big positive piece for our market. So barring some really crazy external data, right? The data that comes in is just so outlandish it just caused everyone some shock. I feel like that trend is probably going to continue to the upside. So I do feel like if we don't bounce tomorrow, then maybe we bounce early next week. But I feel like the trend is going to continue until the data starts to erode confidence. Right now, the big thing is AI. We look at the Magnificent Seven here. It was a butt kicking for the Magnificent Seven. All right, Tesla down 6.6%. I love it. Tesla closed that gap. We talked about a lot of these stocks closing the gap. Well, Tesla closed that gap today that goes all the way back to September 12th. Now, there is an unfilled gap that goes even further back down to September 4th, which is down around 337. So, great. I honestly, I want to see Tesla completely implode here. I'd love to see Tesla go way lower so I could load the boat on it for the long haul because I am a believer of the robotics side of Tesla. I'm a believer in the AI side of Tesla, that it's not a car company, that it's a tech company. So Steve said he sold the 360s. You probably did that because of the premium, right? Because there's not any really good demand zone at 360. Like if I'm looking at it, I would probably go the 350s because it's closer to the bottom here. But still, I think 360s, depending on how far out you sold them, you probably get some great premium on that. But I'd like to see it. I'd like to see it fall more and more and more. Like keep falling here, right? Go fall more. Allow me to buy lower levels. Great. I'm definitely a believer in Tesla. Now, Nvidia, on the other hand, Nvidia had a great little bounce for the past couple days, but then gave up a lot of it. 3.58% slide. Not really that concerning. Again, I've mentioned that until it gets below 164, I still think overall you're in decent shape here. Now, going back to what we talked about, which is where is that trend, right? The trend is your friend till the bend at the end. You always hear me say that one, but where would be that fulcrum point, to that point where I would no longer feel like we were in that uptrend? It would be when we start breaking these lows here right around 176. Right, that to me would be a new pivot low, even though it's not that strong of one. It would kind of signal that okay, the uptrend overall has stalled, and now maybe we start to see some downside movement here in Nvidia. Now, Nvidia has a long way to fall. There's a lot of upside move that has happened in Nvidia since April. Right, in April, Nvidia was trading at lows of $86, peaked out at over 210. So phenomenal rally in a short window of time, but remember, it's the AI king. This is the shovel vendor for the gold rush, and I don't see it collapsing too much here. Google, still looking amazing. Google, really not much to speak of from a technical perspective. I still have this yellow box highlighted because of my mentor. This is where I did an interview yesterday for another company, and they asked me about mentors. I'm a big fan of mentors, but finding the right mentor is a good thing. When I was at the Money Show, and Les Gold was there as well. It was great to see Les. As you walked around, there's other people there that are teaching for different schools, and there was one in particular which I won't mention any names. And their whole pitch is it's a mentorship. It's let us teach you. And I look at this guy who's been in the industry a long time, and I just don't know if he has any credibility. I think that this guy makes more money from selling classes than he does from actually trading. I don't think that his strategy, the things he says are just from left field that don't make a lot of sense. Finding a mentor is very difficult. Finding someone who you resonate with, who you feel that you trust and is honest and is open. And, when I was on that trading floor back in 1998, there was a guy, if you were new on the floor, he would come and he would sit next to you. And he would sit right next to you and be like, hey man, yeah, you should do this, and you should do this, and you should do this. And he'd like point at your screen and be like, and he literally pushed people out of their trading seats. He'd be like, here, let me show you how to do this. And he'd get them in these wild, crazy trades. And ultimately, he just would blow people's accounts left and right. I mean, he was blowing up accounts. And I remember it happened to a couple good people I knew that they lost all their money because of some mentor who didn't know what he was doing. He was just a hack that convinced everybody he's so brilliant. So, got to be careful with that. Kind of like my nemesis from Chicago, who claims that he was a floor trader. Yeah, I traded on the floor. Well, you didn't. You weren't a trader with your own money. You traded the firm's money. But anyway, yeah. Do I remember Reginald Ringgold? Yeah. Yes, I do. Yes, I do. That was an interesting dude, man. Interesting dude. I remember Reginald. Nice guy, but man, when you've got federal regulators coming after you for crypto scams, probably not a good thing. Probably not a good thing. I don't know. You know, Rocky, it's tough. It's tough. And I hate to sound like a company person, but like for me, one of the main reasons I'm still with Trading Academy is our faculty. You look at the traders we have, and they're grinders. They will follow their plan. They'll stick to the rules. They'll grind it out, and they will also help people get their strategies in place. So I'm a big fan of the XLTs. I think the XLTs, which are extended learning track, which are rooms you can go into, and you're collectively as a group placing trades, watching trades, doing analysis, getting trade feedback. To me, I think that's a better way to do it. There's a lot of people that will sell you one-on-one mentoring. Don't ask. I don't do it. I'm not interested in doing one-on-one mentoring. I love teaching. I like the physical classroom setting where I have multiple people, because the engagement between one student and another, actually I can turn that into a good learning lesson based off what somebody may have done incorrectly, and I can make that now a learning lesson for the room. So I don't have a lot of recommendations out there. It's very, 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 very difficult. You know, and what'll happen here, just so you guys know, if you want to lie to your constituents, you want to lie to your students, if you will, what most people do is they will have multiple accounts. So like, 3 or 4 accounts, and they'll fund each one with, let's say, $20,000. And they'll try radical strategies in each one. And what they'll end up ultimately doing is having 2 accounts that lose most of it, but 1 account that wins, and they'll take those numbers from the winning account and show that to you and say, hey, I made a bunch of money with this one. And to me, that's disingenuous. It doesn't show, it just, I don't know. I think that there's a lot of real shady people in the trading and investing world, so be very careful. I think that if you follow me long enough, or Trading Academy long enough, you'll be able to filter through people's BS and be able to tell if someone is really doing this or not, just by their conversations, right? Let's see what else we got here. Rocket hasn't been. Gabe Velasquez, yeah, Gabe Velasquez was good. He used to be a Trading Academy instructor. He does his own thing now. Only been trading less than a year, Rocky? Still learning. I would say right now, your biggest thing you need to do, Rocky, is analyze your own trades, right? And this takes a lot of work. You have to sit down and break down what you're trading, when you're trading it, how big you're trading it, times of day, all the different factors to see if you can find things that are causing you to lose money in those specific trades. Are you jumping from security to security, or futures to futures, or options? If you're bouncing around all the time, good luck being consistent, right? You have to find a strategy that you feel that you can implement, right? And once you implement that, you have to stick to it and get yourself 100 trades using that strategy so you can find out. I have a data set. And if you have a set of data that you can now break down, then you can start to refine and make yourself better. But if you're watching, one trader over here and following his recommendations on YouTube, and this guy over here on TikTok or whatever, and you'll never be consistent. You'll always be just a crapshoot. I'm a trading junkie. It's definitely addictive, man. It's definitely an addictive thing. But if you want to make it as a career and have longevity as a trader, don't think about you have to have a mentor right away, right? You first off need to figure out what's going on in your head and how you deal with the markets, how you deal with information, how you deal with stress, how you deal with a trade that's railing against you right now and you're losing huge money. Like, how do you deal with these things, right? That's what you got to get under wraps first. A mentor can help along the way, but I think you still need to figure yourself out first. Yep, I'm not consistent. Well, then I would recommend getting your trading plan done. Write down a trading plan. Here's my approach to trading. Here's what I'm going to do on each and every trade. And you imagine this, and this is a stupid analogy, Rocky, and for anybody else who might be new, but if I told you how to make chocolate chip cookies and you didn't write the recipe down, you're never going to make the same chocolate chip cookies. But if I had you write the recipe down, step 1, step 2, step 3, step 4, step 5, and all the way through the very end, like how long to let them cool for, you can now make those chocolate chip cookies with pretty much the consistent approach every single time and have the same cookie. From my perspective, that's exactly what trading is. Now, the difference is, in trading, the ingredients themselves change, right? So when I talk about making chocolate chip cookies, I'd be like, okay, you need 2 eggs, you need 3/4 cup of brown sugar, 3/4 cup of white sugar, 2 cups of flour, and a stick of butter, some vanilla extract, and mix it all together, right? That's the basic. That actually is a real recipe, by the way. In trading, the brown sugar changes every day. The brown sugar could be what the S&P is doing, right? The white sugar could be what the Fed is doing. The vanilla could be something else. So all those ingredients are changing. That's what is the frustrating part about trading, is it feels like it's a moving target sometimes. But the more you do it, the more you're aware of those changes and how to modify your strategy to accommodate those changes. All right. It's kind of like basketball. Not everyone is a baseball. Not everyone's a pitcher. You need to find out what you're good at. Sure. And even with that, Mickey, I think everybody can play every position. You just have, you train. You train for that position. In trading, I think it's easier because you find out what your style is up front, right? If you're a quick, impatient person, you want results right away, then you're probably going to be looking at day trading or swing trading or futures. If you're slower, you want to be a little more risk averse, you're swing to position trading. So you can define your style right away. Much easier to do. Hey, when your chocolate chip cookies contain chocolate chips, yeah, I didn't add that. That's at the end. Other than that, just a sugar cookie. Shirt says, I watch Scott McCormick every day I can. Scott's almost too much. The guy is so ridiculously smart. I'm so happy he's a part of our family here. All of you should be watching Scott McCormick. That guy, not only is a CMT, but you don't really see him get too emotional about stuff. He's just a matter of fact, and he's like process. I mean, even the report that he writes, which is called the Beck Report, it's just like, I look at bonds, I look at equities, I look at commodities, I look at currencies, and then once I evaluate those things, I have a greater sense of what the big picture is doing and how that's going to move the markets going forward. So Scott is, he is a machine, absolute machine. All right, we're working our way up the ladder here of the Magnificent Seven because there are a couple that I'm interested in. Amazon. Man, I'm bummed I closed out my short position on Amazon, but hey, I took a nice profit. Now we're filling the gap, guys. And if we look at where this gap technically started, it's all the way down here at 222. Now, I don't think we'll get all the way down to 222, but if we do, I'd probably be okay starting to buy some Amazon for the long haul at 222. Microsoft had that real nice rally. It looked great yesterday. We had that hammer formation. Not really hammer, just it wasn't at the bottom. But yesterday, candle by itself was a hammer, which showed great momentum. And at least I had the expectations that we were going to see a nice upside move. Well, we got one. And then all of a sudden, the market just continued to sell off and push Microsoft lower. So Microsoft down 1.54%. I think Steve probably got out of his long position on that one. Apple held strong, man. 0.19, still in a gorgeous uptrend. There's really nothing here to be worried about with Apple other than it's a shooting star pattern near a top. That's pretty much it. Yeah, exactly, Steve. Meta and Microsoft. Well, Apple is trying to hold. Microsoft is holding that level, but it already looks way weaker. I mean, look at Apple's uptrend compared to Microsoft. There's night and day. Microsoft looks like it's getting weaker and potentially about to break down. Apple looks like the trend is your friend to the bend at the end. Keep going up, right? Apple looks great. And then Meta. So Meta was up 0.14% today, but this chart is just still gross. This is an ugly looking chart. Who knows what the fate here is of Meta, but it just still feels like we're heading lower, even though it was one of the shining stars today at 0.14%. So a small little gain there for Meta. Other than that, not so good. And then you look at the crypto side of things. Let me just sort these because they keep changing. Earlier today you had a lot of double-digit downs for crypto, especially Solana was down 6%. You had Ethereum down 6%. I mean, it's a bloodbath out there, and I don't think it's over. I do think you'll see more downside movement here for crypto, unfortunately. A little bit of a bounce back up happening. We may get it, guys. We may get a close above 100. Remember, I talked about Microsoft or Bitcoin. What's critical from triggering people's psychological beliefs is a close below 100,000. Right now it's at 99,411. We got a little bit longer until we get to the close here. We roll into a new trading day. It would not surprise me to see this bounce back up and get above 100 so we don't get that closing candle there. But it's going to be really close going to the finish line. If it does close below 100,000, I think you see more downside movement here. And it's been pretty darn ugly. TD says CoreWeave, yep. Bad. Like real bad. This is going to be, this may be a damage control type situation. I thought about closing my trade today as I saw it break below the lower end of that yellow box, which is 83.3. But given the current price and my premium, my average price on this bad boy would be 83.49. So obviously I'm way out of the money on this one now, and we'll see what happens tomorrow. I'm not 100% sure on how I'm going to handle that one tomorrow. We'll see. Ideally, I get a little bit of a bounce tomorrow. It rips back up and gets above 85, but I don't think that's going to happen. Yeah, Steve, that's why I'm debating just dumping it tomorrow and closing it. He talks about going to 50-60 range. I'll put a little box on the 50-60 range just so you can have it visually here. It's on snap mode, so it's going to be really difficult. And why? Well, that was this last area where it kind of based for a couple days and then ripped out. So yeah, that's a very logical point. There's even another one I think it might be a little bit better, right around $70. But either way, the prognosis is not good for CoreWeave right now. I was really not hoping, but anticipating that we would hold that $85 level because of that yellow box I have on the top there, but it did not. Now it's not done, right? I have until tomorrow, but I don't anticipate this thing moving up $7 tomorrow. I really just don't see that happening, but we shall wait and see. And that's pretty much it for all the big stuff. Oh, let's go take a look at Disney. Disney, I'll show you the earnings calendar here. So Disney beat earnings by 8 cents. They were up, they beat earnings by 7.7%, but we're down 7.7%. That's kind of interesting. Let's go out here to Disney. I was trying to bring up a graphic of Mickey Mouse looking all sad, but I just didn't have time to get it today. Why is this one so significant? Because if you look at the trend for Disney from June, lower highs, lower highs, lower highs. And we had this little breakout literally on Tuesday and Wednesday, right? We broke this pivot high from October 21st. That's great. It looked like good news. Probably brought in a lot of positive emotion here, and people are like, oh, we've turned the corner. Let's buy some Disney, and then womp womp. I mean, down 7.7%. It closed yesterday at a high price closed at 116, and now you're at 107. So not a good day when you're down $9 per share on Disney. And the question is, will that go lower? Notice the unfilled gaps on the left-hand side of the chart here. There's some huge gaps that go all the way back into May of this year. I'll just map this one out in yellow for you guys to get an idea. We're pretty close to hitting the top of that. Once that happens, Disney could continue to fall down here to 92, which would be pretty darn big fall. Merlin, you could buy a put on. I would need to buy puts. I've got a position. It's not a one contract. I need puts, but yeah, I could. I might do that tomorrow if I don't want to get out of it. Now it says, I heard a good one today from Dan Ives on AI stocks. He said, we are only in the second inning. We have 9 more to go. Totally agree. Yeah, absolutely. Now, and I don't know if I would say second. I think we're a little further into the game. I would put us at third or fourth inning, personally, if I can use that analogy. But yeah, and what could happen? Your bats could go silent in that third and fourth inning. And I think that that's what's going to happen. I think that the whole AI piece is going to deflate for a little bit. Not an implosion. I'm not saying that, but I do think you could see, 5-10% slide in the entire AI segment. And then we'll get some shakeout and possibly see the leaders run this charge back to the upside here. Don't give Disney any of my money. I haven't been to Disneyland in a long time. I wouldn't mind going to Disneyland. I do enjoy Disneyland, but yeah. Merlin, where do you think crypto is heading right down? I just talked about this a little while ago. I think we're headed down. And it's just look at the trend of Bitcoin. Look at the trend of the entire segment. You're breaking new lows here. We may break above 100,000 here and have this candle close above it, which would give me confidence that we're still going to hold. But a close below that 100,000 mark on the spot price of Bitcoin would signal to me that, okay, the bulls cannot support it at 100 grand, and therefore we're going lower. And I've got some stair steps some stair steps drawn on your chart here. Right now we're at 99,585. And it looks to me like your next stop is going to be 93,450. After that, you're looking about 85,000. So, yeah, a ways to go. Yeah, would agree with you on the Tesla's a critical point right now. But look, I think most of us here wanted to tank. Oh, disconnected. Give me one. Let's go back to Tesla here. It's at 400 even. Again, that whole number psychology. When you get this thing down below 400, it'll start to trigger more selling points. And right now in the after-hour session, it's just teetering right at 400. I'd love to see this thing drop to 350. Let me buy some at 350. Merlin, when do you consider the close? When the candle finishes forming. And so Big Eb's going to ask, and this is a great question, is when you look at these charts, where's that 24-hour window? I guess I could tell you by going here and going, let's break this into a 5-minute candle, and let's just see when that rollover is. So it looks like we've got a few more hours to go. So right here, that candle, you guys can see where my cursor is, would be the midnight candle. That's when the candle started forming. So now all of a sudden it's rallying back up. It should have a end candle right at 14. So I'll put a vertical line at right here. Bam. So there's your end point for this candle. Is it 5 p.m. Pacific? Okay. Let's really do it scientifically. I can go here to the daily candle, and I'm going to click on, let me get rid of this bad boy. Let's click on today's candle and see what the opening price was. The opening was 101.634. So let's go back to a 5-minute time frame, and I'm going to put a line on here and say 101.634. And that's 101.634. Hit OK. Okay. So that is telling me where the opening was. It's at one of these price points, right? And there's a lot of touch points. It actually looks like we've got a long way to go. It looks like that's the opening candle, which is at 7:35 this morning. So not sure. Not exactly sure how that happens. But if it is in fact going to happen at midnight, which would seem to be the logical choice here, then we got plenty of time for this thing to get back above 100,000. And you notice what's happening right now. It's on a nice little run. It could very easily close above 100,000. It's interesting. Interesting thing going on right now with Bitcoin. Love it. All right, let me go back to a daily here. We'll talk about some economic stuff. Naum says SKYT Skeet is 17.76, almost 16 bucks. Merlin, I bought 2 days ago at 21.64. I'm going to double down. Ooh boy, why are you doubling down? Okay, so no, I guess buying it. What did you say? You bought it 21.64. Let me just put a line at 21.64 here, and then I want to ask you a question. Not to be a jerk, okay? It's brotherly love. But you bought when it was after this massive run, after a huge spike up, and you bought near the peak. I get it's a good company. Well, I don't know. I have no idea what Skywater is, so I cannot say anything about the quality or character of this company. What I am saying is you're chasing something, right? You went after and jumped on something that had massive surge up in price in a couple of days. And I'm willing to bet you if I add volume on here, you're going to see a huge spike. It's not too bad. I was expecting there'd be a much bigger spike of volume on the green candle from Monday. So, you made a mistake on this one. No, you bought too early. And again, it does not look, it doesn't mean this is a bad company. It just means you got to time your entries better, right? If you had asked me where would be a good buy point on this one, after this big move here, I'd say, well, you got a couple different points, right? One, I think, would be somewhere in this candle here, right? Maybe go a little bit lower on that bad boy there. Well, that would be today. Other than that, the only other spot that I like would be this candle way down here at the bottom, which is about 14 bucks. Now, will it get down there? I don't know. But one thing you got to be careful of is chasing. And it looks like you chased this bad boy. You know you did, so I'm not going to beat you up over it. But you know you chased this bad boy because you really wanted it and got emotional about it. You got to go, where's a logical point for me to buy? And it's definitely not there. Maybe at the origin of this big jump up. That could be one. And then the other point would be here. Love you now. Don't think I'm picking on you, buddy. Just, I'm the voice of reason. Oh, boy. Michael, I'm worried. Let's go. Guys, let's look at the downtrend of the day. Michael wants to look at DLO. Okay. It's sideways. Hey, hold up. I bite my tongue on that one. D local. So right away, it's pretty low volume, but it's okay. It's okay there. He's a chaser. That's right, Batista. Well, not always. Not always. He says buying the dip down to 13. So, okay. I like your logic on that. Here's your line at roughly 13 bucks, right? It's a little bit lower than that. The only concern I have for this one, Michael, is it hasn't done anything for 4 months. August, September, October, November, it's just been bouncing back and forth between 13 and 16, right? So the direction's not there anymore, although it is making higher lows since April. But honestly, what isn't making higher lows since April? My concern would be if you bought at 13, that it breaks down below that and then tries to fill this gap, and that's going to be down around 1160. So at least this one's in an uptrend. I like that, although it's not that strong because the last 4 months have been just choppy garbage. What you could do, and this is definitely a viable strategy, is just kind of map out the highs and lows here, which I'll put a yellow box around the price for the past few months. And since it's near the bottom, okay, buy as it comes into those lows, but what you have to do is you have to jump out of this thing if it breaks down below that lower side of that yellow box, right? You can't sit there and hold it too long, otherwise you could find yourself holding the big loser. So just have rules in place that if you do buy at the low end of this yellow box, which is 13, fine, but just have a stop loss in place. All right, what else did I have? That one. Oh, on a sad note, It's the end of an era. So we were mocking Michael Burry the other day. Not mocking him, but just talking about how traders of power, influence, right, that have the public's eye, because he did something great with the Big Short. The guy got lucky, right? He read it right. He made a ton of money off it. Now the industry perceives him as this guru. Today, he stepped down. He's saying, I'm closing my Scion fund. I'm returning money to investors, except for some cash out fees, etc. But bye-bye, Burry. Done. And when I look at a lot of the trades that he's done, and look, I don't want to be hypocritical because I'm not a public figure like he is, and he has to disclose his positions. And I'm pretty sure, we talked about this yesterday, there are people that don't like him and will go out of their way to make the trades fail, right? I'm just making this up, but let's say I'm BlackRock, one of the largest asset managers in the world. And let's say for some reason I just can't stand Michael Burry. And he comes out and he says he's got a multiple billion-dollar position short on NVIDIA and Palantir. I'm going to look at my trade desk and I'm going to go, okay, guys, let's do something collectively, collaborate, and jack the price of Palantir up to screw this guy over, right? That happens all the time. Him and your friend Scam. Well, at least this guy is a real trader, right? Michael Burry actually trades. Now, is he successful at it? It doesn't appear so, right? I think he's closing down. He even admitted that it's just not, his timing is off and it's not working for him. So much respect to him for dipping out of the spotlight. I think that he doesn't want to run a public hedge fund. I think he wants to do his own thing, and I can't blame him. I don't think I'd ever want to run a hedge fund. I don't want to ever manage people's money. I will trade my money all day, every day, because if I screw up, that's on me. I don't want to, if Liz is like, oh, I invested $100,000 in Merlin's hedge fund and I lost money, I would feel guilty about that. And so I would never do it. So it would never be something I do. And I'm pretty sure that he's in that same camp of, I'm just tired of all the stress and all that stuff. People thought he's pretty bizarre. Right on the back of him shorting NVIDIA and Palantir. Do you think he got smoked on those shorts? I do think he got smoked on those shorts. Because remember, we talked about, look at the Palantir one, right? Here's Palantir. Remember, he bought puts, which have time decay to them. And if you look at the window of time that he disclosed, that was up to the end of September. So it was basically 3 months behind this blue line right here. Let's go back 3 months. Let's see. This is September, there's August, and there's July. So at some point in this window right here, we don't know exactly when, at some point during that window, Michael Burry shorted Palantir, right? So he bought puts, heavy puts. And as you can see, that most likely, looking at where price is, if I'll put a horizontal line here, that red line, anything above that, guaranteed he lost money, right? There's no way around it. The other side of it is he had time decay. So it may have, it may be that, depending on where he shorted this, anything could have been a losing position. He may have lost millions and millions and millions on that trade, and just now he's just put his tail between his legs and he's like, yeah, I'm done. I'm out. That was wrong timing of me. And here's the sad part. One of my mentors many years ago on the trading floor, he was consoling me one day because I had some trades that I made and I thought that they were perfect. Literally, I thought that these were perfect freaking trades, and I lost on all of them that day. And it was just like, man, what's going on? And by the end of the day, every single trade would have worked out if I just left them open. And so this guy came up to me, and his name was Ray. We called him Shooter Ray because he always looked at that guy that would be the shooter on the trading floor. He comes up to me and he goes, if there was a cemetery full of traders, it would be chock full of tombstones that would said, he was totally right, just too early. And to me, that represents a lot of this, right? Michael Burry may be completely 100% correct on Palantir and maybe completely overinflated, maybe way above its skis. But you can't short something because you believe it's overvalued. What you have to do is you have to wait for these things to go the other direction and show you that they're now going down, right? So when you're trying to pick, they say when you try to pick tops and bottoms, you end up with stinky fingers. Merlin, remember Circle at $300, now it's at 80. Is there any chance this could go bankrupt, or since it's investing in treasuries, there's no way it can go bankrupt? There's always a way. It's a good question, Steve. There's always a way that it could go bankrupt, right? Because if you look at the vehicle itself, what is it? They're taking a physical dollar, making a digital token, and they're buying treasuries, they're buying, keeping it in cash, and putting it in the repo market. That's pretty risk-free, right? So there's not too much risk there. The question of Circle going under isn't that the stablecoin is okay, it's how are they running their business. You've got a lot of people there that are making 6-figure salaries, maybe 7-figure salaries, I don't know. Stock options, right? There's a lot of money being pulled out of Circle to the CEO, CFO, CTO, COO, all those different people are taking money out. So could it go bankrupt? Sure. It does make me happy to look at this price chart because you guys remember early on, I was saying that this makes no sense. There's no sense in this, and unfortunately, this cost me $6,500, right? So I lost $6,500 on options by buying puts here, and I think Big Eb, you did too. And this is going right back to what I just said. I was absolutely right on this, and I will stand by it. There's no way this valuation of Circle should be $280, and now look at it. It's falling aggressively. Back to realization. Why? Because Circle is making money at 4%. So if they have $100 billion, great, they make 4% on that. They got $10 billion, they make 4%. That's your profit. And they're doing other things in different countries. They're doing licensing agreements. There certainly is some other money coming in. But I was with you, Big Eb. And you probably lost money because of me, because I said I was doing it, which is why I generally don't like to share trades with this show, because I don't like when people lose money on a trade that I'm okay losing money on, right? I even told you, I said I have $7,500 I'm willing to risk on this one. I lost $6,500, and I was like, I have $1,000 left. Should I jump back in with some puts? And I said no. I just decided not to do it. But here you have a company where when you understand the business model of Circle, it's not like they're coming up with a new chip that is the latest, greatest thing that people just want these chips. They're literally just taking $1 and making it digital. And there's not a lot of markup, right? Their profit margin isn't massive on this. So it's okay. You're buying dinner soon. Yeah, I am. We'll have to get that going. I don't think the dinner's going to cost as much money as you probably lost on that Circle trade, but all right, let me run through economic calendar now that I look and see that we're getting near an hour show again. It's amazing the way that happens. So December 10th is when the next CPI number is supposed to be released. For tomorrow, which is your Friday the 14th, you got natural gas storage. You got a couple of the FOMC members, Schmidt, Bostic, and Logan will be speaking. Bostic and Schmidt are voting members. Logan is not. But really, it's just about natural gas storage. And then the earnings front, it's super quiet tomorrow. There's nothing to speak of that's that exciting. If I remember correctly, yeah, there's nobody that's really that exciting on earnings tomorrow. So should be a relatively quiet day, at least from major news coming out and causing big market movers. So Michael says, love the hour shows. Yeah, I'm sure you do. It's a lot of work for me. I've got a whole bunch of other stuff I got to take care of. So that'll do it for me. I'm going to wrap up. If you guys have comments, questions, feedback, things you want me to discuss on tomorrow's show, you know what to do. You can email me at tradermerlin@gmail.com, which is on your screen right now. Or you can put your comments down below any of the YouTube videos, and I will incorporate those. I'll make tomorrow's show about listener questions if you guys have them, so send them on in. And if you are new, I see a ton of new names. Hit that like button if you liked it. And you can also hit that little bell on YouTube. That will alert you to every time the show goes live. And follow, subscribe. Take care, everybody. I will see you tomorrow.